Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The July corn contract is showing some resilience coming off of the key low of 369. You can see that the market has moved up very nicely, and after breaking through a 360-degree resistance at 388.5, it has managed to consolidate a bit and find some strength. In today's movement, we see some additional strength as it makes its way up to about 408.5. And if we're able to get above or close through this area, which is actually very close to previous highs, then we are looking at a potential move that could in fact test the 428 to 430 area for this contract. So we'll continue to monitor that. In all likelihood, we'll probably see some good consolidation occur somewhere in the neighborhood of 410 to 415. But strength through that area could point to about 428 to 430 as well. And so we also want to watch how prices react at this near-term area. When we overlay our levels using the market profile analysis tool, we have our point of control sitting at 389.25, but above that, one standard deviation above is 432.75. So that's going to coincide with a potential move to the upside if the market is able to find some strength here. The December contract has found some support and resistance inside of these two angles of 45 and 360, 406 overhead and 395.75 down below. So what we're seeing here is the market wanting to retest or in fact break previous highs and make an advance upwards to about 416. At 416, I believe we should have some significant resistance, but above 416, the next test area, which I do believe is unlikely, would be about 426 or so. As we can see here, we've had a very nice long-standing resistance band that the market looks to close above today. Now, we still have a few more days left as we go into the long holiday weekend for Memorial Day. And so that's going to be very important to see how we close going into the rest of the week, to see if hedge fund managers look to take some positions off or just simply take some profits, or if they continue to hold their net long position through the weekend. One standard deviation above the point of control sits at 403. And then two standard deviations above that point of control is at 418.25. So those two levels are going to be important for us to watch. Obviously, we're trading above the 403 right now, so 418.25 is going to be our next key resistance point. Soybean has been very interesting in its movement. If you recall way back on May 10th, we had the WASDE report where the market rallied up, found an exact high at our key resistance level, but since then has really been consolidating and has been moving in a sideways movement. Now, that sideways movement that we're looking at coincides with the potential terminal space with the 23rd. What we're looking to happen near or around the 23rd is for this consolidation to terminate and for the market to commit itself to a particular direction. For a while now, we talked about how we wanted to see the market come in and make a near-term high, get a nice correction, and then from that correction make one final advance that will either breach the previous high or come in below that previous high for a final top. We had been looking for about 1100 to 1110, and it looks like the market may do that and continue to move up into the first or second week of June. We found very good support yesterday at the 1043.75 level, or that number, and so we'll just simply continue to monitor this. One pattern that we want to bring to your attention is a very nice flag pattern that's occurring here. So if some strength is actually able to come into this market, we'd be looking for a move about the size of that move from Tuesday, May 10th, to occur again, which would land us right at about that 1110 number that we spoke of not too long ago. A couple key levels that we want to have at our disposal would be one standard deviation above the point of control, which sits at 1008, and 2 standard deviations above the point of control at 1168. If for some reason the market's able to find some good strength beyond that 1110 number, then 1168 would be the next area that it would be looking to run to. That's unlikely, but again, we have to consider what the market communicates and to see how much the funds really want to push the markets up at this point. The pattern that we saw for the July contract is mirrored here for the November contract. We found great support at our 90-degree mark at 1021.5. Overhead resistance at the 180-degree mark is at 1053 3/4. And if we're able to close above this number of 1053 3/4 this week and really hold itself, then we'd be looking at a test at a minimum of 1086.5 with a potential run to 1120. We're looking at the same flag pattern here on the November contract with a nice potential break to the upside. 2 standard deviations above the point of control sits at 1066, and so really that's very close for the market. And so what would happen is that we would be looking to make a shift to see where prices would find its next key area or key levels of resistance overhead. July week continues to trade quite interestingly. The weakness that we've been seeing is consistent with the bearish narrative. We've had a very nice run down over the past couple days, and we have downside support sitting at about 455. We believe the market wants to test this number one more time, and upon closing near or below 455, we think the market could make a run down to about 447 for its next support area in trading. If we take a look at some of the key levels that we're looking at, we had kind of an ABC pattern here where the market came in and made a run, came back down, and then made a pullback, and then made another leg down. Initially, we were looking for this distance to be mirrored in the move back down, and that would give us that number of 433.5. But before that can happen, we need to see a close below the 457 3/4, and then we'd see a test of 447 as the market progressively makes its way down. A really good close below 447 we believe would give us a high probability of touching 433.5 at a minimum. Previously, the market did find very good resistance at the point of control of 482.5, and 487 was the number on the previous chart that we were looking at. So that area was very good congestion and resistance for him and continues to be as such. Crude oil continues to play its cat and mouse game, and we went through and we saw how this wave 5 that we initially thought may have terminated here has now extended itself. And we also have a subwave count inside of 1, 2, 3, 4, 5 to help us see a potential terminal space for this wave 5 movement itself. And so as the market comes along here, we have some very good potential resistance coming in. So if it terminates near this area, we also have a new timeline coming in, which would be the tangent of this arc. If that occurs, then we do have a potential top coming in, and we have a very good level of about $50.15. So as long as the prices stay below this area or very close to it going into the Memorial weekend, we could see a drop here. Historically, the market has actually declined during this time threshold over the last 15 years. We believe 13 out of the last 15 years it was a decline. What we saw this time instead is what we can consider an inversion, where the market instead has now gone up. It initially went down at first to sideways, but after the announcement by Goldman Sachs, the market then turned back up again. So what we would anticipate seeing here is historically the market actually does rise from this timeline for about a week or two. So since we got an inversion to the upside here, we could see an inversion on the other side that follows it shortly there afterwards. Thank you so much for joining us for our weekly market update, and we will touch base with you again next week.